Hey guys, and welcome back to my channel. Today I think I will go back to the basics and we'll go over what this whole strategy that we teach at FortitudeFX is. It's very simple. Anybody can do it. You don't need to have a degree in statistics, mathematics, probabilities, none of that, right? So you just need some common sense, some control on yourself, a good mindset, and then literally anybody and everybody can be successful at this. And then you can also, once you master this, you can also tweak it, right, to bring it and make it your own, right? So what works for you. So without much delay, let's go to our charts. What do we see here? We have a UJ chart for the 27th of February, and the entire thing is based around two concepts. The first concept is that, when you have a strong momentum bullish candle, typically and probabilistically, the following candle will also be bullish. And this is just not theory, right? So what I'm trying to establish here is the fact that each candle, so if I highlight this candle right here, okay, this candle, a strong bullish momentum candle, within this candle right here, within this candle, so even let's look at 15 minutes, within this candle, there is a freaking trend, right? Look at this 1 minute. So the way I set up my charts is I have my 15 minute on the right hand side and I have my 1 minute on the left hand side. And when I highlight this candle, you can see there is a 1 minute trend in it. There is a high, there is a low. This high was broken, lower high was broken, and a higher high was created, higher low, higher high, higher low. Now let's look at this leg, right? Let me get this out of the way. So once that is out of the way, let's look at this leg. So higher high, higher low, higher high, higher low, higher high, higher low. Where in this leg typically would you want to catch your trade, which will give you the most bang for your buck? You obviously want to catch the dips, right? The lowest price that you get offered at. You don't want to be paying premium, and then once you pay premium, price tanks. So obviously you want to wait for discount prices. You want to wait for that pullback to happen on your trend. And these are the dips that you want to get involved in, these dips right here, yeah? And then likewise, on the flip side, when you're going on a downward trend, the pullbacks are the pushes going on the opposite direction. And you want to capture those peaks for then the price to go down when you're in shorts. Over here, would you want to catch a trade over here, or would you want to catch a trade right here at the lowest points, right? So when I look at these charts, these lowest points, typically, when the trend is established, right, the next candle is bullish because we are following the trend. So the idea is the trend continues until it knots, and it does not continue until, you have a strong low, this low that gets broken. Once this low gets broken, you are then in a downward trend. In this case, where do you want to enter? Obviously at the peaks, you want to enter here, you want to enter here, you want to enter here, right? The pullbacks, because then the price is going down and you got in at the best possible price to make all that money. So given that, why do I say now that every 15 momentum candle, always watch out for a momentum candle, because then it gets followed by a momentum candle, not because it's magic or it's logic or it's probability, because the trend on the 1 minute is just continuing. It's creating higher highs, higher lows, higher highs, higher lows. That's what it's doing, right? So how do we then connect the two? We connect the two by simply highlighting the momentum candle, right? And then understanding what is going on in this box, right? So when I get involved into a trade, at this point in time, right? So let me mark this vertical line. There. This is the first 15-minute candle, which is right here. And this is the second 15-minute candle, which is this one right here, yeah, the start of this one. So I am trying to anticipate where in this candle can I enter into a trade. And once I enter into that trade, I leave it, whatever trade management it is. But in order for me to enter into a trade, there are certain things that has to meet, right? So the pullback has to be there. So there's a good pullback. I need a liquidity sweep. Now a liquidity sweep is what? It's a structural low or high that has broken a structure point, which makes it strong, right? So in this case, this low is a structural point, a fractal low that has broken this high and this high, right? So it's a strong low. And if price swept that, there are a lot of orders. There's a lot of money sitting behind this, right? A lot of people who have placed their orders. The way the market moves is that price taps into all those orders, gets the fuel, the money, to then catapult itself to higher highs. That's the game, right? That is how the entire market is laid out. That's how all the algorithms work, right? So in this case, I don't see a liquidity point. So for me, there is no entry. I just do not enter. I'm not scared. I don't FOMO. I don't enter. So let's look at potentially a trade here. The earlier candle. Let's see what happens here. I can draw my vertical line as such on the start of this candle. It is a clear trend established on the 1 minute. I just want to follow this trend. Is there a low, a fractal low that has been broken? No, there is none. So I don't give a damn and I delete this. I'm not shy. I'm not scared. I don't FOMO in. I don't care if I miss this entire leg and this can go to the moon, as long as it does not meet my criteria. And folks, you have to understand this. In order to play this for decades, you have to be peaceful in your head. If you're not peaceful in your head, you will make mistakes. And in order to continue this for months and years, you need to find that balance where you don't give a damn about the market. Your rules meet, you enter. Your rules don't meet, you don't enter, and the market will stay. It's not going anywhere. If it's going to the moon, it's going to fall right back. So you get involved then. If it falls right back, it's going to move again. You get involved there, right? So let's look at some of these trades right here. So if I highlight this, and if I then place the mark of my second candle right here, right? So I'm going to take this out because it's highlighting some of these candles here. Now tell me, is there a structural low that has been taken for me to get involved into this trade, right? Do we have within the first 15-minute candle clear structure break? This high broke this strong low, so this is strong, right? And now we are in a bearish trend, but instead of continuing bearish, this strong got broken again, and now it's continuing in that direction. So this is the mark, right? Right here. Everything before this is already been established. I'm waiting to see if liquidity gets swept in this candle, and my entry criteria is a stop order as soon as the liquidity is taken. Simple, right? So tell me a point. Tell me a structural point which is a liquidity point. And I will tell you that it is right here. And this is where it got swept. Look at that sweep. How clean of a sweep is that? I mean, it just goes, grabs the orders right here and just pulls back. I know the market is now set to just fire in the opposite direction. This low broke this structural high, this high, and then it got swept. Simple as that. Now you may question, this is too insignificant. This is too small. This is not worth my time. But you guys are trading within a 30-minute window, and all the information you have is in the first 15 minutes, the 15 1-minute candles. That's all you have. And in order for this pattern to be built, this is enough, right? If I start waiting for clear, strong moves with clear structural breaks, I will probably not get a trade, maybe 1 or 2 trades per month, and sometimes even those fail. Yeah. So once that is in, what I do is I place my long stop order. I place my stop loss right below that, 3.1, fantastic. And look at this, beautiful. As soon as I entered, the next very candle just gave me my return. I mean, I don't go too high. I go to 1 to 2, 1 to 3, and that's my return right there. And I am done within the 1-minute candle. My day is over. This is how simple it needs to be. I can go on and give you multiple examples. Let's look at one right here. So this is a candle, right? There. So the first 15-minute candles, this is the information, it is there. The pullback is happening. Do I see any structural breaks? Any liquidity? So if you say this is a high, this low never got broken, so this is not a solid high. For me, for this to be taken, it's no big deal. It happens all the time. Yes, the price did drop, but there is nothing that confirms me for my entry criteria. So why would I get involved? And these are the trades you will miss. But by missing these trades, you'll keep your sanity, right? Next one, let's see what happens there. This right here, a good enough candle? Nothing, absolutely nothing. Let's look at this chain right here. Yeah. So let's look at this one. Anything happening here? For me, nothing. Let's drop down. I missed the trade. Boo-hoo. Let's go on. Anything happening here? Nothing for me. There's no trade. Let's move down. Anything happening here? Maybe here. In some feeds, this might be wicking this high. So this definitely is a structural point that broke this low. If this got swept, I would for sure be in to catch that ride. Yeah, and it probably would have been a nice ride anyways. It would have been a very nice return. But that's that. Let's look at another trade. Let me highlight this. Do we have a downtrend established? Yes. Is there any structural points I can say that got taken out? Yes, you can argue. This would be one because it swept the previous candle's high and then it broke the low of this candle and then it got taken out. So for me, if I were looking to trade and during the lull period, this would be the trade. But it did not give me a good return. By the time it would have come back, I would have been break even anyways. So this did not really matter. But where else? This is a nice candle, but this is way before London opens. But let's see. Right there. Is there any structural break past after this vertical line here on the right? Tell me. For me, there is this low got swept right there. I would have taken a long right there. If I was trading pre-London during those hours, it would have been a tiny 1.62. And that's your return, 3.6. You could have gone to 2. But this is how simple it needs to be, guys. I can't tell you enough how simple this is. You just need to show up at charts. You just need to figure out where do I need to enter. You just need to figure out A, B, C, enter. If B misses or C misses, you're not done. You're not entering. If A is not there, the setup is not even set up. If A happens, B does not happen, walk away, right? You can miss many, many trades. And some of the trades will be losses too. But I don't care because I know what my process is, and in the long run, that process will bring me winners, which will keep me positive. My equity growth will continue to rise. All right, guys, you all take care. Bye-bye now.